If you follow the business world at all, you've probably heard this acronym, ESG, popping up absolutely everywhere. It stands for Environmental, Social, and Governance. And believe me, it has quickly become one of the most powerful and, let's be honest, most debated ideas in the corporate world. So what does it actually mean? Let's get into it. So here's our game plan. First, we're going to talk about the big picture, why we're even looking beyond pure profit. Then, we'll nail down what ESG actually is. After that, we'll break down those 3 pillars, see what it looks like in the real world, and wrap up with why this whole thing matters so much right now.
All right, so first up, going beyond the bottom line. For decades, the goal of a company was super simple, right? Maximize profit for the shareholders. That was it. End of story. But that whole way of thinking, it's changing, and it is changing fast.
And this really pushes us to ask a pretty fundamental question. Is making money the only thing a modern company should be doing? Well, a growing number of people, we're talking investors, employees, customers, are all starting to say, no, not anymore. The argument is that real, long-term, sustainable success means you have to think bigger. You have to consider your impact on the planet and on people.
Okay, so if profit isn't the only goal, what is? What else should a company focus on? Well, this is exactly where ESG comes into the picture. It gives companies a real, structured way to think about and, more importantly, act on these much bigger issues.
To put it simply, ESG is basically a set of criteria that measures how a company is doing when it comes to its environmental impact, its social responsibilities, and its internal governance. Investors use these standards to look past just the financial numbers. They want to get a sense of a company's long-term health, its hidden risks, and frankly, its ethical compass.
Honestly, a really great way to think about it is like a report card, but for a company's conscience. It's not just about how much money they're making. It's about how they're making that money and what kind of mark they're leaving on the world.
So let's break this down even more. What do the E, the S, and the G actually mean in the real world? Let's dig into these 3 pillars.
Okay, first the E for environmental. This is all about the company's impact on the planet. Think carbon emissions, resource management, how much waste it produces. Then you've got S for social. This is all about people. How does the company treat its employees? What's its impact on the local community? How does it handle your data privacy? And finally, G for governance. This is the behind-the-scenes stuff, how the company is actually run. Is the board diverse? Is executive pay fair? Are they respecting shareholder rights?
All right, so that's the theory. But how does a company actually do any of this? How do you take this framework and make it a reality instead of just a document that sits on a shelf? Let's check out ESG in action.
Well, it usually follows these 4 steps. First, they assess what's called materiality, which is just a fancy way of saying they figure out which ESG issues actually matter most for their specific industry. Then, they set clear, measurable goals. Now, this next step is critical. They have to integrate those goals right into their core business strategy. It can't be some side project. And finally, and this is so important, they have to report on their progress transparently so everyone can see how they're doing.
Okay, let's pull back and look at the big picture again. Why has this ESG thing suddenly become such a massive trend? What's the real-world impact that's driving this entire conversation?
The short answer? Money. A huge amount of it. Just look at this chart. The amount of cash flowing into investments that focus on ESG has just exploded. We're talking $22 trillion back in 2016, jumping to a projected $41 trillion this year. I mean, when that much money moves in one direction, companies have no choice but to pay very close attention. This is not a niche hobby anymore. It's a massive force that is reshaping global finance.
But of course, a shift this big doesn't happen without a lot of debate and some pretty sharp criticism. On the one hand, the business case for it is really strong. A good ESG score can help you attract the best talent, it can lower your long-term risks, and it can build an incredible brand reputation. But the critics have some really valid points. They say the metrics can be super vague, which creates a huge risk of greenwashing, where companies just say all the right things without actually doing anything. And honestly, trying to measure something like community impact with a hard number, that's really, really difficult.
So what this all boils down to is a massive push to change the very definition of corporate success, to move away from just looking at profit and towards a much broader idea of value. And that leaves us with this huge lingering question. Is ESG just a trend that will fade away, or will it fundamentally redefine the entire purpose of a corporation and maybe even reshape capitalism as we know it?